Okay, time for the hot picks section of the show. Today we're going to be talking about real estate investment trusts. Our next guest is relatively bullish on the story of shopping centers. Moriarity is a senior investment strategist and the ESG lead at CenterSquare Investment Management and joins us now. Great to have you with us. So first of all, when it comes to the REIT sector and this idea of leaning into the shopping centers, what do you like about shopping centers? You know, everybody's online right now. Some people wondering if everybody's still getting out to the malls, et cetera, et cetera. But what do you see when you look at the actual businesses?
Great to be here. Thanks for having me, John. From a shopping center perspective, this is a sector that we are really bullish about here at CenterSquare in general. We are investing in shopping centers across our private equity business, really bullish about that in the REIT sector as well. I mean, if we think about fundamentals across the shopping center space here in the US, we haven't really had new supply in the sector and going on a decade plus, there is no new supply really on the horizon. So you have low supply. At the same time, you've had population growth, especially in the suburban areas where a lot of these shopping centers are, as you've had the millennial generation getting older, moving out to the suburbs. So you've had great population growth, so you have great demand, you have no supply, so you're setting up for really solid fundamentals here. Okay. And so that's something that we've been really bullish about. As we're thinking about that in the REIT sector, the sector really has been under pressure so far this year, and that's really been because of headline risk associated with tariffs, as well as, we've been watching the consumer for a long time here. There have been a couple retailer bankruptcies. All of those things have really been headlines that have been weighing on the sector so far this year. So it's a really great opportunity to get access to some really, really strong fundamentals from a real estate perspective and do so at a discount here today across the sector.
Okay, you got me interested. So let's get into a few different picks here. First of all, BRX, Brixmor Property Group. Give us a quick take on that one.
Brixmor is a favorite here for us. At this point, you've had a couple retailer bankruptcies roll through the portfolio, but at the same time, those bankruptcies are offering a really, really great opportunity for the portfolio to capture the strong fundamentals that we're seeing for this property type. So as they're getting these boxes back from the retailers that have gone bankrupt, they are seeing leases 40% higher, for example, on some of these spaces. And so we're expecting some really strong growth in earnings from this name in terms of the internal growth here as these leases roll through the portfolio.
Okay. All right. Moving along, another one, Kite Realty, which is KRG. That's the symbol on Kite.
Yes, Kite, similarly, really, really strong fundamentals across the shopping center space. For this portfolio in general, we are anticipating a really strong earnings season coming up here in the next few weeks. We are anticipating that we should see a bit of a beat and raise from this company as the fundamentals on the ground are shaping up to be what we believe to be stronger than what is currently baked into the company's guidance. And so expecting to see a bit of a beat and raise for this company coming into earnings season.
Okay. And finally, Cousins Properties is the other one you wanted to flag today. How come?
So Cousins is a great example of a Sunbelt office portfolio. This company has a really, really strong portfolio. Think Class A office buildings and strong growth Sunbelt markets here across the U.S. Their portfolio, about 70% of that is in Austin and Atlanta. Those two markets seeing really strong fundamentals from the office perspective here today. For example, in Austin, we're seeing leasing volume significantly higher than what we had seen last year. In Atlanta, we're actually seeing a lot of office stock coming offline as those office buildings are being converted. So as you're seeing this kind of supply coming off, there's no new supply. I mean, if you think about the story in office currently, replacement costs are significantly higher than rents are currently. And so you're not seeing any new supply. So as you see low supply, again, demand starting to pick up and stabilize across some of these markets, a portfolio like Cousins is really, really well set up to gain a lot of the share of the pie of demand that's out there, given the really strong portfolio they have in these markets.